Good morning. It's West Pacific Market Analytics, and I wanted to get the West Pacific week out to you again this week with just some updates. Don't have anything in particular I want to focus on as far as some of the last videos where we looked at the potential for a debt crisis and that sort of thing. I'd like to try and do a special video for month end next week. Got some ideas around what I want to do on that, so I want to see if I can put this month-end video together. I think we're at a truly key reflection point in time right here, and I want to show that to you. I don't want to use the T word. Everybody keeps beating me up about using this word for tops. Please pull back. Doing our best out here. If you think data analytics was that great, go ahead, start your own modeling company and make it happen. But I can tell you this right now, there's one thing about my walk and my path over the past few years has given me, and that's absolutely character and strength and clarity to what lies ahead. Now, what do I mean by that? Well, people don't realize, and I just see it everywhere, how people don't understand this idea of really how it all works in life and in creation. But this idea that, you have to stumble and fall. You have to meet struggle. You have to have failure. Because only through that process, can you develop the strength, the character, the perseverance, the ability, the clarity to be able to see things in a way nobody else can see. There's just no other way. Unless you go through that process, change can never be evoked. And that's a big part of the problem, because we've blown this bubble here because nobody wants to face the piper. Nobody wants to just do the right thing because they don't have that ability. It's that simple. They're too into themselves. They're too into the greed. They're too into their own egos to have allowed to do the right things where never we would have been into this situation we're in right now. I reminded you, in the last 17 years, we've created 70% of the nation's debt. 250 odd years since our founding in 1776. And in 17 years, we've printed and created and brought into play the debt of 70% of this nation. That is simply wrong. And nobody asks, why did they do that? Or nobody asks the questions of what's that about? But you know what it's about? It's about the pattern, because really they don't have any control. And I don't want to get too much into a lecture around that. I could give an hour-long lecture about how all this works and get you to see that it just has to be that way. Because truly, I'm telling you, what lies ahead, everybody thinks, oh, they can just print more money, don't worry. I just had a friend, or I should say a client that's becoming a friend, because him and I see so eye to eye right now and everything's going on. I had some very long conversations here in the past couple of weeks with a very large money manager in coming on board to use my data analytics to help his wealthy family office type clients. And he was at a meeting out in Florida this past week. There was over 1,000 broker dealers at this meeting. And he said everybody was bullish as bullish can be. It's only up and up and up. Keep your clients in, stay long, keep driving forward. He said there was not one breakout session talking about what if scenarios nor risk management. And that's why we've got a peak here. And that's why all of this that I see in my vision ahead can unfold. Because just nobody sees it. Okay, read the disclaimer and let's just jump into some of the models. Have yourself a great Sunday. God bless to you and your family and your health, your happiness, your success, your walk, your path. Give thanks and take the time to do something nice every single day for somebody else. These charts and updates for educational and entertainment purposes only, so please read it. Have a relaxing Sunday. I'll have a sip of coffee. Good to see y'all. Hit the like, hit the subscribe. Doesn't really matter. I'm going to keep coming at you for those that want to hear what I've got to say, and I appreciate your support. I don't think my YouTube channel is ever going to grow to any huge size because it's such a niche little area. But those of you that want to see this data, we will keep bringing it to you. So let's jump right into some of these ideas now. We're going to run it right off here, off of our Member Discord site, some of the stuff we were looking at this week. And we'll get into some of this data here right now. And I want to show you some of this because I think it's kind of cool. Again, if you want to get a hold of me, destinytrading@gmail.com. I'll send you out some information to come on board here into our member site. Now, let's just start with this idea, okay, this private sector rollover freeze. Now, my thinking is I looked at these 4 scenarios up here. We talked about these of what could potentially play out ahead. And I think this one stood out the most. And this idea of a private sector rollover freeze. Corporates and shadow banks rely on short-term dollar funding. And if geopolitical shocks like a trade war or cyber event spook the lenders, the same sudden stop that hit Germany in 1929 could hit the emerging market corporates, then the global banks, then the core markets. And there's the AI was saying it's a medium probability of that happening. And they're saying that Fed swap lines would blunt the dollar squeeze, but non-U.S. banks are still holding $13 trillion in dollar liabilities. And look what's going on in the commercial real estate market. We're seeing major defaults here across our nation in all the major cities. So if that's happening here, you know that's going to start happening in places, if not already ongoing, in places like Europe and France and Germany. And as holiday resort bookings, I saw bookings were already down on the Costa del Sol this summer in Spain. They're down by 15%. If we started to see a tourism spiral, we could start to see defaults on hotel properties. We're definitely going to start to see default risk in the Airbnb market. The housing market's in a massive bubble. If we just went down 60% in price, it would only take us back to the 2019 levels. If that doesn't smack of a huge bubble, I don't know what kind of coffee you're drinking there this morning. So this doom loop scenario, or this private sector rollover freeze, could be interesting. So we're gonna look at some of the emerging markets. I think I want to dig into this a little bit more in the monthly video around this idea of the emerging markets, and look at some of the global banking models and that sort of thing. Because let's start with this first model right here. Let's get into this. We're already getting a bit long-winded here in talk, but that's okay because I think it's important. Now, this model really kind of just snuck into my screen, and that happens sometimes. Is I'll have these moments as I'm looking at the data and something just screams at me, and this just jumped off my screen this week, and what a model it is. And I'm like, with my members, I'm going, take a look at this, guys. This is saying something. And you'll notice here this line across the top of the model. You see it here? See this line? Right there, right? Okay. Now look, we're going back to 2019 right here. And notice Brazil topped out and hit that line. And then the beginning, first quarter of 2021, China hit that line. And then in late 2021, Russia hit that line. You thinking like I'm thinking here? The BRICS, right? There's India over here. India hit that line at the same time in 2024 here. First France hit that line, then Japan hit that line, then India hit that line. So we've got the 4 major BRICS. Germany just topped out on July 11th, and the US topped out on Friday. Now, what's so incredible about this is every single one of these tops, Brazil, China, Russia, France, Japan, India, never came back up and traded to this line. So in other words, once they came off this high, they never reached a new high. Which says that Germany's now hit this line. Let's pull over here. There's Germany in the dark green, and it's now below. And there's the U.S., this blue candle. I can pull it out. It hit the line right there on Friday. So the last to top was U.S. So look, if all these others hit that line over time, and now the U.S. has hit that line, wouldn't you kind of say, that's it, we're done? I would. Next week is going to be interesting. Now let's look at this SPX model. You can see here in these boxes, this is when we had our bearish corrections. And that was on this signal coming down, right? So we had one of these signals coming down back in 2018. And then we didn't get another signal until 1, 2, 3 years later. And then we had another signal 3 years later. Even here when we had this spike down in 2020, we didn't get a signal. And you notice the dot curve was still rising. The V channel or the MOC was getting really weird here before we had this big corrective move lower. But it was all rising. And I noticed the momentum channel topped out. And notice now the momentum channel is down here and price is up here. Notice here we were trading right in the momentum channel right here in 2022. Here's your MOC, then it did a bull cross, small bull cross, was creating right here and then collapsed, and then we had this pop out. But it's down here. But notice this signal. So every time we had this signal top, we had these corrective moves. And lo and behold, we're up there again, fitting that top signal. We've got a double signal top right here. The last signal was obviously all the way back here. Now notice we had a minor signal at 4,100, and then we had the secondary signal at the October 3,400 low. And now we've got this double signal up top. Now those can wander a little bit, but I think it's pretty close to being here. Look at this confidence model, right? This is a model in market confidence. You can't go any higher. Look at it in this rising wedge here, right? Look at it, rising wedge out of 2020, going right up, and it's now, look at this, long-term rollover in the velocity. The velocity has now peaked out. That's peak velocity. The momentum of the velocity of the market confidence is topped out. The signal's as high as it can go, and the V channel's below. So market confidence is peaking. Now in some of these trends, I would expect to see this idea of peaks because we've only just hit the high, right? But let's look, for instance, here at the compact, right? The compact's been strong because pretty much this whole market is the financials and the technology sectors that are holding it all together. Healthcare's already fallen way off. Utilities are still holding somewhat strong. Energy is getting ready to break down, but energy is only 3% of the S&P. The majority of the S&P is like 31% tech and 13% banks. So just the tech and the finance are bringing you up to almost 45% of the S&P. Okay? So it's not just the FANG, because the FANG only represents about 31.8%. It's telecommunications and some other sectors. And I think maybe we'll jump into some of those on the month-end report I want to try to do next week. And we'll look at that. But we can see here in the compact advancing, the velocity has been topping out now. Basically started right here in 2023, 1 year, 2024, 2 years. So 2 years of the velocity topping, and now it's starting to roll over. And you notice our momentum top in the V was back here, 2021, 222, right here. In the 2021 year, we got the momentum top. Now we can get these long-term momentum tops because we're pulling this data back from a long ways in time, way back in time. So it takes time for things to top out. And even once the momentum tops, we can still get things rising because you can see we can still rise within the V channel. So we can be, look at, see how we rose up here to these indicators. Now we've had this little bit of a pop out here in 2024. But you can see we can't go any higher. So this again fits the thesis of that model we started out with. Now this can all start to roll over real quickly and we can have our corrective move down. And that's all we're going to see, right? It's not going to be, let's not talk market crashes. But the thing is, let's look, okay, so that's tech, that's the compact. But if we look at the total market model, this is the entire market. You notice here since July of 2023, the velocity has been draining, okay? And look, the market's up here. We say, well, Glenn, how can the market be up here? Well, it can be up there because we've still had this strength within a large sector. And we can see the strength in finance a bit as well. But you see that within the compact, right? The NASDAQ's been very strong. But you can see the rest of the market is selling off. So we can already see that we shouldn't be up here. And this is still a big part of the market. So it's all priming There's no question it's priming. Here's a technical model I was looking at. I want to watch. You notice now we're getting the velocity down, the trend down, and look at this, just incredible. 70% of our nation's debt, right, in 17 years. So when is that? 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Well, lo and behold, at the low of 666, this whole rally was created by creating 70% of the entire history of America's debt. No wonder we've had this huge rally. I just don't think that's sustainable. It's not. We're at least going to get a corrective move. Now, I'm not looking at a crack, so we can see we're breaking here. We're getting ready for the corrective move lower. We see here with 2022, here's your corrective move. 2021, it came down inside of the V, but you notice here the velocity coming down, and now velocity coming down. And we're here. And then we look at this. Remember, it takes 300 years in the 300-year cycle. So remember the 300-year cycle of democracy. 1776, 17 years, 70% of the nation's debt. Late stage democracy, 2076, we're in the last 50 years. Every single democracy in history has not made it much more than 300 years. Other societies have, but they weren't democracies. They were feudal systems, king systems, or a lot of systems we saw in China, which has been a civilization around for a long, long time. But they weren't democracies where the people had freedom and a right to elect their leader. It was more communistic type systems where we had military leaders, we had kings, and that sort of thing. So we're looking here. You notice how prices popped out here since the end of 2023. You notice that's 3 months, that's 6 months, that's 9 months, that's 1 year, and then that's 1, 2, 3, 4, that's 2 years that we've popped out here. This is a quarterly model. Now, at some point, I think this black line that we've seen continually rising in the model, you notice how it's starting to want to break over here, and we're right at the top of the dot curve. And look at the trend. The trend's coming out. The velocity's been coming out since 2016. Does that look healthy? No, it does not. Look at the advancing. Here's the advancers in the market. You can see again, right? Declining velocity. Declining trend. Notice every time we got up here, here was this corrective move. We got up here, small corrective move, and we're turning down again. So we're almost done. It's interesting we have this triple candle on the monthly, right? We really don't have the right kind of candle here to call this a typical falling 3 pattern. But you know me and 3 white candles, just like back here with the 3 black candles, that was a reversal pattern. This could be a topping pattern. So I wouldn't be surprised to see this candle hold up, or a little bit of backing and filling here in the month end, and then a big black candle that could take us down aggressively. We could see the entire month of August, a big black candle on the other side of this. This is there. You see how it's just floating up into space on everything, right? Interesting. So let's finish off with just a couple of the models here. And I think this move off the top, remember I was thinking originally we'd finished up here the A top, or we finished the top. Well, it seems to me like this was a 4 down and this was a 5 up. I mean, if you lay a count into it, it's pretty clean, 1, 2, 3, 4, 5. I'm not an Elliott Wave guy, but it's there. And you can see here, look at this. You notice here off the top in 2022, look at the trend breaking and the market correcting. Here we go again. Look at the trend breaking and the market correcting. Here we had the initial reaction and then this pop out. But notice the trends continue to break lower here. This could be fast down. We can see it here. Look at the V channel rolling over. Here's our indicator in red. Notice the V channel is forming very aggressively, a sloping downward here into the coming few months. And price is sitting up here. And we've never had price sitting up here at any point in time. You notice all these red indicators were always above the price. Red indicators above the price, red indicators above the price. We've never seen price do this, popping out above the trend. This is good. We could see some sort of event and this just collapse. If you want to call that a crash move, I guess you could, but it's just correcting back to the mean. Now let's jump over here. I want to talk about crypto quickly, and I did put this up somewhere else. We're going to just, first of all, I want to discuss, let's just go here. Let's look at ETH first. Look at this formation in ETH going back here to 2017, 2018. Look at this nice looking shoulder here. There's your left shoulder, there's your right shoulder, there's your head, there's a shoulder formation. And then look at this head formation up here. There's your left side, lower low. You see that 4,300, 4,800. There's your head, there's your shoulder. Nice looking head formation here, head and shoulders, head and shoulders. And then look on the right side here. Here's your left shoulder, here's your head. And now here's your right shoulder. So we've got now the right shoulder of the right shoulder. And notice here how we are now developing this collapsing V channel go out into 2026. There's your neckline down here at 82. And what I think is going to happen here, we're going to have to see this gate open. You see how we're holding gate here based on the trend? But I think what we could see here is just to come down, test the mock curve, have a rally back up, come down with the market down here, have a rally back up, and then collapse down the V channel. If you're in ETH, don't be fooled. Who's that guy? Tom Lee? He's going to get wiped out. Here's my take on Bitcoin. Okay, let's look at this first. I mean, this has got a massive head and shoulders formation too. Look, here's a nice looking head formation, 2021-22, shoulder, head, shoulder, head, shoulder, right there. There's a nice looking box. And now we could look at this. Here's a left shoulder. Here's our topping head. And now I think we're going to come down to about 55,000. And form some sort of a right shoulder here. And then I think eventually we're going to chop around to that right shoulder, and then we're going to break down lower. But I think what's going to happen is we could break down lower, and so that forms a shoulder, a head, a shoulder for the topping pattern. And then we might need to do a right shoulder like we did over here. So we could break below 55,000, come down here, bounce around a little bit, form a right shoulder, and then have it all head lower. But notice right now the flows are coming out aggressively. Look at that line coming down. You see it right there? Look at that line coming down. The flow's just coming out. So I think we're pretty much done here at the 123. The signal's rolled over. You notice we had the signal low back here. All the way back here. Let's scan out of that. All the way back here at that 22,000 low. And this looks pretty done up top. So I'm looking for that 55,000 area, and it fits this model as well. So you can see here the V channel, look at it, performed perfectly. So look at us coming up here, and even here we have this even bigger. So here's our here's our shoulder, here's our head forming. We've got to come down, form that second shoulder here. So we might even come down and form a little second shoulder here first. We'll have to see, down around 74,000. We don't necessarily have to come immediately down to that 55,000. We'll see, but it can break there. So the 55 would take us here, because it might want to stay up here in the V channel. So we'll see, but it's going to break. And then we could get a head, a shoulder, shoulder, and then come down and form another shoulder here. You see, so then this whole topping head and shoulder pattern, you notice we got a big left shoulder over here, which is something we'll talk about further out. But we could come down, and that would fit the V channel here. So you can see 55,000 would keep us right in the V channel. Now we could leave the V channel depending on how fast this trend breaks. You notice velocity's flatlining. We don't have as much velocity as we had back here in the 21-22 period. But you can see that it's all heading down, getting ready to bear cross. This looks done. This looks ready now to come down. And we're going to want to see what it's going to want to do in this channel. But you can see that momentum is topping out. It's never topped out in the history of Bitcoin. And we're going to see into the end of this year momentum topping as this works lower. I just can't see it. The model's not there. We popped out of the V channel. And we performed perfect. Notice how nice this is into the mountain of velocity. Dropping back into our V channel. Getting below our V channel. Coming up, hugging the line because velocity and trend were just building, but staying well within the channel. Popped out of the channel, now needs to come back. So we're seeing this kind of same look at as we see in ETH, but I think ETH's a more speculative play. We're going to see it collapse much, much quicker, whereas Bitcoin's going to have a corrective move back down here into about the 50,000 area, and then it's going to chop around. We're going to see a lot of bouncing around in here, and eventually once this formation is done, then it will start to break lower towards the second half of 2026. And XRP, yeah, we're watching it, but it's too speculative for us right now. You can see our gates at $1, and the V channel dot curves at 70 cents. So we're watching this $1. If we get a nice sell-off down to $1, we're going to take a look at it. But with the whole Bitcoin space looking corrective, I mean, that would make sense going out here into 26 that we would see CERT work its way back down into the 70 cents to $1 range. And that might be fun to play for another bounce back up, but we're going to have to see. I mean, it's pretty speculative, this one. All these people talking about to the moon and all this stuff, I just don't see it. It's not there. We're overpriced. We can't be priced this far above the V channel. We cannot be priced this far above $1 price point on the gate. It's too far. This has all got to play catch up. The MOC has got to rise. This channel's got to rise, and then price can rise with it. It's not just going to take off. That never ever can happen. It won't happen. So enough of my rambling. Just some things I wanted to bring to your attention. Let's see how this market looks next week. If you're in Bitcoin, don't listen to the talk. Cut your. If you got it from a trading standpoint, don't be a hero here. Don't be blindsided. The model's right. And get ready. Just be ready. I've been telling you prepare for a while now. There's a time to prepare, and that's not just at the last minute. And I mean, that's advice I'm giving more to larger money managers, because it takes a long time if you've got a large position to get yourself out. And there's some things still holding up. As I mentioned, utilities haven't broke, energy haven't broke, those safe haven type trades, but they're not going higher. At some point, they're going to break down as well. We'll probably look at some of that stuff in the month-end report next week. Have yourself a great finish to the Sunday. Thank you for tuning in, and I'm out of here. Again, you want to get a hold of me, destinytrading@gmail.com. Shoot me an email. We can talk. See ya.